Okay. I guess I'm getting a couple of thumbs up from the attendees. In that case, since it's 8:47 now, I think let's get started with this session. So yes, as you can see the slide today in front of you. And also, by the way, I want the session to be a little interactive. So feel free to unmute whenever you want. Feel free to stop me anywhere you want. And, let's keep discussing and let's keep it very interactive. Okay. So let us look at the first slide that all of you are looking at, right? As Mr. Mohan had said, we are conducting a training session on budgeting and forecasting. Now, many of you must have heard the term budgeting and forecasting, but some of you would have heard the term budgeting versus forecasting. So the question is, what are these two items and are they the same or are they different? Most of us use these two terms, interchangeably as if they're one and the same, but are they actually the same? Well, they're definitely not the same indeed, right? So in this session, let us get into our first segment. And in the first segment, let us just quickly cover what the fundamentals are. Let's talk about what the definitions and differences of these are, the key components of these, and any other misconceptions as well. So before I get into the session over here, let anyone from the participants, any of you, please unmute and just quickly tell me in 10 seconds or so, what do you mean by the term budgeting? What does budget mean? Anybody, feel free just to unmute and give a short sentence on what a budget is.
Control process for financial next period or next financial period and approved from the authority.
Okay, that's a very well said answer. And if you noticed, he used certain important words such as a control or a financial period, which is given for approval purpose. And that exactly is what we are going into as what is budgeting. Now, budgeting in one liner, it is simply put as budget can be said as something equals to a target. Budgeting is nothing but it's setting a plan for a fixed financial period. It can be quarterly, it can be monthly, it can be half yearly, it can be annually. It depends on what the goal of the entity is. And it is not just simply setting a plan, but it is setting a plan with targets and constraints. That is where we are trying to achieve a goal. So budget, you can say something like a target setting process where we want to achieve certain goals. Okay, now that we know what budgeting is, can someone unmute themselves and tell what forecasting is? Is it the same as budgeting or does it have a different definition or meaning? In simple terms, can anyone just unmute and tell what forecasting is?
You can say, or good evening for you can see the calculation or the controlling of the forecast or the revenue and the expenses at the same time.
Got it. And just
or
in line,
planning,
I think
the planning for the forecasting for the future expenses or for the next financial period, we can say also.
Okay. Now over here, I think you mixed two things. First, you said something like a projection you mentioned, right? And then you said plan. Now, generally, I would say planning for expenses or budgets would come into a budget section over here, where we are setting a plan for certain targets and constraints. But that one simple thing that you mentioned, forecast is nothing but anticipating. You're trying to project a future. You're trying to project or trying to find a direction based on the current trend or the past trend or anything in the changing environment. And the core idea being you're trying to predict the future. So in simple terms, we're saying budgeting is trying to set a target, but forecast is trying to find a direction. And forecast, you're trying to find a direction based on the situation. It can be the current trend, it can be the past trend, or it can be, the changing environment that is going to come ahead of you. So while budgeting is trying to set a plan with target and constraints, forecasting over here is simply put, we are trying to predict what the future will be based on today's situation. Now, to give a little more idea into this, let us look into what the key components of these are. Now, when we are looking at budgeting side, Very commonly, all of us would have heard sales target. I'm sure everybody would have heard the term sales target. Now, setting something called a sales target is an example of budgeting. But when I look into a trend forecast, or when I'm looking into scenario planning, that is a very common example of forecasting. So keep in mind, when we're talking about budgeting, we're trying to set a target. But when we're talking about forecasting, we are trying to predict what the future outcome will be. It's not what we want, but it's going to tell us what will be the future. So certain key components of budgeting here are sales target. We can set budgeting based on cost centers. You want to do capital expenditure control purpose, operating expenditure control purpose, etc. While in forecasting, you will commonly hear these terms such as trend analysis, predictive modeling, scenario planning, and historical data extrapolation. I hope this gives a very, very nice idea of the difference between what budgeting and forecasting is. Are we all clear here? Is the speed okay for everybody?
Yes, it's clear. Thanks.
Yeah, it's clear.
Great. Okay. Now that we know what the key components and the definition of these two are, let us look a little more into the differences between what budgeting is and what forecasting is. Now, when we look at a planning aspect, from a planning perspective, by default, all of us would generally use the term budgeting because budgeting is a planning tool. It is used for setting goals, for targets and constraints. But forecasting is an anticipation that is based on today's situation. We're trying to anticipate what the market will be or what the changes in the operations will be. When I'm talking from a control aspect, budgeting talks about, allocating resources and cost management or cost control. But from a forecast point of view, we're not talking about control perspective. We are not talking about resource allocation. Rather, we are trying to find if there are any corrections needed in the future based on today's situation. From a reporting perspective, now all of us would have heard the term, budget versus actual. Has any one of you heard of the term forecast versus actual? Out of curiosity, everyone would have heard the term budget versus actual, but why not forecast versus actual? So when we talk from a reporting perspective, a general norm is we do variance analysis, and variance analysis is not with forecast, but we are doing a variance analysis with our budgets. But forecasting is not for variance analysis. Forecasting is for the future purpose, and it is to give us a real-time financial insight on the future based on today's situations. Now, to give a very small example from a compliance aspect, we are talking about, say, budgeting. Budgeting, an example will be, it's required, when you're trying to plan your corporate tax, especially this year, it's the first corporate tax period for most of the companies out here. And a lot of you would be already planning, based on my current profitability, what will be the provision for taxation I need to keep in my audit report. I'm pretty sure all of you would have come across this. That can be a tiny bit of budgeting. But when I'm looking into forecasting, I'm looking for the next year. I'm trying to forecast what my profitability for next year would be and what would be the likely outcome of the taxation based on that forecast. So we come back to the first slide, to the heading. We spoke about budgeting. We spoke about forecasting. We spoke about what budgeting and forecasting is. And now we try to speak about what budgeting versus forecasting is. So it's very two simple terms, but it has huge differences when it comes into our professional life. Any sort of doubts over here or any sort of, points that you would feel like adding here? All good? Shall I keep proceeding?
Yes.
All
Yeah.
right. Okay. So we spoke about what budget is. We spoke about what forecast is. We spoke about little differences between these two. Now let us talk about some intersections. When do we use these two terms together? Now, these two terms are not always separate from each other. We cannot keep them separate. Instead, we use them together. Now, budget creates accountability. For example, if I have to put in a simple example for you, if you're a company, you're trying to set, what your budget for 2025 is. You're creating your sales target. You're giving your teams what their targets is. You're giving your manufacturing department what their production budget is, what their cost budget is, etc. But then you start the year. And then from the first 2 months itself, you got to know that there is a change in, raw material prices. Now, suddenly, you have to rethink what your future is going to be. Is it a long-term fluctuation? Is it a short-term fluctuation? If it's a long-term fluctuation, I need to forecast that if I go in this direction, I will most likely make a loss in the future. And now, if I want to tackle this outcome, I have to come back to my budget and revise my budget. So this is where a key intersection between budget and forecast come into place, where budget is set for planning, but I can revise my planning based on my future forecasting. If my direction is not going the way I wanted it to be, I can come back to my budget, revise the budget, and then recheck my future, whether I'm going in the right direction or not. So here, if you read that example over there, it's a company preparing a static annual budget, but you revise it quarterly basis, or you're revising it every monthly basis based on the actual sales or based on the price fluctuations you're seeing in the future. And that exactly is where a key intersection between budget and forecast comes into play. And last but not the least, between these two terms you should know is common misconceptions. So from all these slides that I just ran through, the last 10 minutes we ran through, can we say budgets are equal to forecast? Definitely not. They are not the same. Are budgets rigid? Basically, if I set a budget, at the start of the year, am I allowed to not change it, or am I allowed to change it? Definitely, these are not rigid. Instead, as we keep moving forward, we use forecast, we use the insights we're getting from this forecast exercise to come back and revise my budgets on a time-to-time basis. So common misconception, that budget set is rigid, it cannot change. That is definitely not true. Budgets can change based on the financial insights you're getting from forecasting the future. And last but not the least point, it's not a misconception, but a true point is modern budgeting embraces flexibility. In today's world, especially in the world of technology and high dynamism over here, no budget can stay fixed. You cannot set a budget at the start of the year and expect it to be the same for the rest of the year. If you do that, I'm pretty sure your company is going to be in disaster. Instead, what dynamic companies do is they use financial insights from these forecast exercises to come back to their budgets, revise the budgets, and then move ahead. So I hope this provides a very brief, a very short introduction on what budget is, what a forecast is, what the difference between these two is, and how these two intersect with each other. With that being said, before I proceed to segment 2, would anyone like to give any sort of comment on segment 1, or any sort of clarity do you wish for, between budget, between forecast? Do you think that you need some more examples to understand what these two are? Guys, come on, let's make it interactive.
No, so far good. So far it's very good.
Yeah, it's good. It's clear.
So far, so good, yeah? I hope I was able to break down that misconception of these two words are the same thing, but now I hope you have it in your mind that these two are separate things. Yeah? Okay. Now let's go to second segment. We are done with the fundamentals. We are done with the basic definitions, right? Now let us get into professional or real world insights. Starting up with, we spoke about budgeting. Now, can someone give me, or can someone try to attempt or give a definition of what a strategic budgeting is? Is it the same as budgeting, or is it different from strategic budgeting? Can anyone give a try?
Obviously, every budget comes with a strategy, I believe, whether to increase the sales or to cut down the cost. or so on and so on. Yeah.
Definitely. Every budget comes with a plan. Every budget comes with a strategy. No budget is made simply out of nothing. Instead, it comes with a plan. Now, a strategic budgeting is a budget which aligns with the vision of the company, and not just the vision, but are given clear KPIs. These two important terms that you're seeing there highlighted in yellow, that is what makes a budget a strategic budget. It's where a budget is aligned with the vision of the company and with KPIs. Now, to give an example, if you notice down there, if a company is aiming to increase its market share in the GCC by 15% over 2 years, that's an example of a very specific vision that a company is wishing to achieve here. Now, when you're setting a budget, you're giving it a vision, you're giving it a goal that is to be achieved here. And in this example that you can see down over here, the goal is to increase the market share in GCC region, and that too, it's quantifiable by 15% over the next 2 years. If that is the case, based on this vision, you are giving certain targets to the budget. In this example, we can see certain examples are you're going to prioritize marketing spend. You want to increase your market share, so you better get into that marketing side of it. You start allocating resources to expand your distribution channels, not just your local market, but you want to get into the different parts of GCC region. What is it that you need to do? Quickly think, and one of the common point would be allocate enough resources. It can be either marketing, it can be staff. Give that resources to expand your distribution channel. And not just that, you're going to set clear KPIs around regional sales growth. When we talk about KPIs are nothing but key performance indicators. Now, can someone tell me what the role of KPIs is while making a budget? Why do we need KPIs while setting a budget? I can set a budget today saying that over 2 years, I need to increase my revenue by 15%. So I'll go to Excel. Every month I will do is equal to into 1.15 and drag a formula, and I have my budget over there. Is that how I'm going to prepare a budget, or am I going to give it clear KPIs? Definitely over here, if you think about it, we need to give clear KPIs. It's not just increasing your sales. If I'm increasing my sales, I should give my sales team a KPI. I should tell them, within the first 2 months, achieve sales in this much level. In the next 6 months, expand to so and so market. I will break the entire vision to pieces. It's like there's a saying that goes by, how do you eat an elephant? You can't eat it in one shot, right? You will have to break it down to certain pieces and then take it piece by piece. In a similar way, when you have your vision, you make it into numbers, you budget it. And while budgeting, you need to break down into certain achievable targets. And that is when your vision plus the KPIs make a budget into a strategic budget. Okay, now that we know what a strategic budget is, can someone give me a common example or common way of how to achieve the strategic budgeting? Who is going to make the strategic budget? Is it the management? Is it the employees? Is it the low-level managers? Is it the owner of the company? Who is going to prepare the strategic budgeting?
I think it involves all the tier of the management.
That's a lovely answer from Karan over there. Actually, definitely, your strategic budgeting is not what a manager says, I want 20% sales increase in the coming 2 months and full stop. It doesn't end there. A strategic budgeting will only be successful if you have participation from all the tiers of the management. Exactly like how Karan said, participation from all the relevant departments is very imperative for making a strategic budget. What do we mean by participation from departments? We're talking about involving department heads, involving functional heads in the budgeting process. We are setting not just the top level management, but we are taking the execution level staff as well, their inputs to formalize or to break down that vision into proper KPIs. Now, this approach is generally called a bottom-up approach. A bottom-up approach is nothing but where where the top level is not setting a target for you and then telling you to achieve it. Rather, you have a vision of the top level. You have steps being provided or inputs being provided from the lower levels of the management to the upper level on how to achieve that target. And on doing that, staff would feel a sense of accountability, a sense of ownership to achieve it. Imagine you are setting a goal for yourself to achieve the company's vision. Wouldn't you feel more inclinated toward achieving that? Definitely. And that is where a strategic budgeting will become successful. Now let us look into certain examples. Let's continue the example from the previous slide itself. In the previous slide, we are talking about a company who wants to increase its market share in the GCC region by 15% over 2 years, right? I'm continuing the same example. Over here, I will be able to prepare a strategic budgeting where the marketing team is proposing targeted campaign ideas, targeted ideas based on consumer behavior insights, based on consumption details. So it's not just the manager setting a sales target, but it's the marketing team giving inputs based on what the customer behavior is as of today or what it can be. And along with the marketing team, the logistics team is also coming in and they're saying, okay, we can achieve this, but I need so and so items to be arranged by the management. And if that is arranged, the logistics team will surely kill it and they will achieve the target. So where the management is having a vision, you're having your departments or different functional teams give their expectations, give their inputs into how to achieve this budget. And that is where the sense of accountability kicks in to make a strategic budget a successful budget. So you see that very small difference between what a budget setting is to what now a strategic budget is. Are we clear all the way here, right?
Yes.
Again, I want to take a small run from the top again. We spoke about what a budget is. We spoke about what a forecast is. We spoke about whether these two are different. Yes, they are different. And now we are speaking about what a strategic budgeting is out of it. A budget is a plan. A strategic budget is where a vision and a KPI is set to achieve such a plan. Okay. Now let us look into certain real life examples. Day-to-day examples that most of us as finance managers, as auditors would have seen, as tax professionals will try to attend, or as analysts of certain companies, right? Let us look into certain examples over here. Say we are taking the example of an operational forecasting and how it is interacting with budgeting. Now, very common item is when we talk about forecast, the first thing that people goes into their mind is whether it is a revenue forecast or whether it's a cash flow forecast, right? Let us take cash flow forecast here. What do we mean by a cash flow forecast? A cash flow forecast is nothing but forecasting a cash flow, a regular cash flow, in order to avoid liquidity shortfall. You're trying to focus that based on today's spending or income receiving, what your cash flow balance is going to be, where you're going to spend more or where you're going to get your money more. An example in this case is a professional firm operating in the UAE. Some of you might be professional firms over here. Some of you might be audit firms. Some of you might be a tax firm. Can be anything. So a professional firm, if you're operating in the UAE, a very common aspect in the UAE is, it's very hard to collect funds from the market, right? Most of you will be having quite a bit of credit lying with the customers over there. So trying to manage your receivables from the client and managing your salary payout, it's a hard task. Most of the finance managers or the HR departments would be looking into, how to achieve or make sure that the payroll goes out on time. Now, this is where an interaction between forecasting and budgeting comes in place. So based on my client interaction today, I should be able to forecast what my expected collection will be, what my expected expenditure is going to be for the coming month. And based on this, I need to understand whether I will have enough cash to pay out my salary or whether I will not have enough cash to pay my salary. And based on that future outcome that you're anticipating, you need to make a decision today and set a target. And that target can be, either to take a short-term borrowing right now, or either to take an advance collection from a certain customer right now, or it can be deferring a payment that is not very urgent right now. I'm saying I will pay it only in the next month. So in this example of cash flow, of a professional firm who's trying to pay out a salary, you can see where a very small interaction between how he's forecasting what his outcome is going to be. And based on that forecast, he's trying to take a decision today how to meet his expectation. He's trying to set a plan today, whether he needs to take a borrowing, whether he needs to take an advance from a customer, or whether he needs to push a spending to the next month. Are we clear here? Can all of you relate with this example that I'm trying to give out? Guys, come on, some feedback here. Let's make it interactive.
Yes, so far everything's good. Very well said.
All right, yeah. It's a very common issue. I think everyone can understand from each company trying to get customer payments or managing credit with the customers. Okay, now let us look into a second most very, very common example. Let us talk about revenue, sales pipeline, and revenue trends. Now, how do we break this down into a scenario? Now, forecasting revenue, how do you forecast revenue? Without looking at the slide, just from top of your head, how would you be forecasting your revenue? By default, we will first take, what was the historical data, what was the sales we did for the previous months, and then we'll try to predict what my future sales is going to be. Or you can take your current data. How do you get your current data? It might be the current customers in your pipeline, potential customers that you're going to get. And based on that data, what are you going to do? You're going to forecast what your upcoming sales are going to be. Yeah. So in the example, you can see that. Let's break it down to 3 parts. We are taking a historical trend. For example, a trading firm in the UAE, they're reviewing the sales order of this quarter and they're comparing it with the previous quarter. And they're trying to see whether, it's going up or down. If it's going up, naturally we will say the trend is going up. If the historical data is telling that it's going downwards, we will say, it's going downwards. But not just your historical trend, you need to look into your current pipeline. Now, pipeline can be where, you have your potential customers lined up and your sales team is expecting that, they're going to close so many leads. They're going to convert these leads into sales in the coming 1 month, in the coming 2 months. And based on that data, based on such confirmations of client interactions, you are going to estimate what your likely revenue is going to be for the upcoming months. So either based on your historical trend or based on the current situation or your current leads that are in your hand or your current expectation, you are going to forecast what your revenue is going to be likely in the coming months. And based on this trend or based on this forecast that you're doing, you're submitting this input to your finance team. Why do you want to submit this to your finance team? Because the finance team will now use this information. They will use this financial insight to do their internal budgeting. If the finance team is getting to know that, in the upcoming months, you're going to have good number of sales, they can expect the amount of collection they can get from the client. They can expect what are the payouts for the expenses they are going to do. They can plan for doing any capital expenditure, that's been waiting for so long, but you didn't have money. But if you're expecting that a huge inflow of cash is going to come in, I can take that decision today. So an insight by forecasting can be used for setting a budget in the future. And there yet again is a classic example of how forecasting and budgeting are intersecting with each other. But we are not talking about cost here, we are talking about revenue point of view. And now let us look into third example, which is a very common, probably a hot selling topic over here. It is nothing but UAE corporate tax, right? Who isn't talking about UAE corporate tax? When we're looking into UAE corporate tax, for a tax planning point of view, everybody needs to carefully forecast what their tax payout is going to be in the future. Now, 2024 for the financial year that is already ended, I don't think there's any forecasting left to do. You will know what your outcome is going to be. You will have already budgeted it over there. And over there, using that historical data, you will know that, today you're going to pay out so and so amount as tax expense to the government. And they will have to use this insight for making a provision, not just in their audit report, but make sure that they actually have the funds available with them to make the tax payment to the government and avoid any fines for non-payment. So let us break this down into two portions, the forecasting and budgeting portion. Now, a forecasting example can be a mid-sized trading company is projecting its annual taxable profit based on projected revenue, projected cost of sales, and projected expenses. You're projecting for 2025 or the next quarter, you're going to hit so-and-so profitability. And based on that forecast insight, you're bringing it back to the finance team, and the finance team is now taking a budgeting decision. They are saying, in the coming 2 months, out of the collections I'm going to get from my customer, I will set aside X amount as a provision for tax payment. So yet again, we're trying to see on a real life basis how a certain aspect is taken, a certain aspect is used for forecasting, and that forecasting insight is used for taking a budgeting decision. Yeah. So quickly running between the three examples that we just went through, we spoke about how a cash flow forecast works, a revenue forecast works, and an example that is relevant for today, especially the first tax period of UE, how a tax planning works or tax provisioning works, a forecasting works. Okay. Now let us get into a different topic. Now we spoke about what forecasting is, we spoke about what budgeting is. Now let us look into certain common techniques of how to perform these budgeting or forecasting. I'm pretty sure all of us would have heard these four terms. There's top-down approach, there is bottom-up approach, there is a zero-based budgeting approach, and finally, there is something called a rolling forecast. Okay, now that we know there are these four headings over here, before I get into the slides, I want each one of you to unmute yourself and give me a brief on each of these. Okay, who's volunteering up to give a small brief or give a small idea on what a top-down approach would be when we speak about budgeting?
If we are talking about the top-down scenario, means from senior management to divisions or small department or the staff. On the other hand, the bottom up, it is from the divisions or from staff going to the management and senior management. But before, just I need just to clarify. Depend Mr. Jason for the sector. يعني I mean in government sector we have budget from يعني or for yes, we can say like this, but also we have some objectives and we have the seniority يعني who is responsible to approve and the time for approval, and also it is the period, if it is 1 year or more.
Definitely. You know what, if I have to interrupt you, I think it was interesting that, you're from a government sector, and I'm pretty sure your insight will be very, very valuable. So if you don't mind, can you give us an example that you faced in real life, for this top-down or bottom-up approach that you came across?
In government sector, we have the government has a plan centralized for each local government, and they take some finance from federal budget, and they have some resources for the local, and they take feedback from each government department, like finance department takes some data from municipality or from economic department or from tourism department, and there is some account it is saying over and deficit between the finance department and others because some local department it is only expenditure, and other maybe it is they have some resources or some revenue. So it depends. In this case, they make the consolidation. What is the requirement is, what is the resources, what is the expenditures, what is the project, and based on that, they built up. We can say from the bottom to down, or from down to up, based on the each sector, and the centralized decision and approval later on. But for the number 3, the zero base it means if we are starting from zero, or first year, or we can say before projection, or we have to start from zero. Yani we don't have any resources, we don't have any expenditure, and also this came at the year end when we finalize the actual. We will start from zero. This is the number 3. Yani we don't have any over or deficit from previous year to as a resources or as a project. So this is it is zero based.
Amazing.
Last one, rolling forecast. This is we can say it is yani we have some plan also, and we can change, or we can go back to the decision making, or the authority to make some analysis and some changes, and also it is not يعني we can say the ruling it is not control, or يعني we can make some changes, or we have to based on the matrix يعني I mean the authority can change. Who approved, he can he has the authority to change based on the current situation.
Lovely. I mean, wow. I was expecting you will take up one portion and then give the rest to the others, but I think you're too experienced that you've taken all the 4 parts of it and explained it really well, actually. So kudos to that. Thank you, Mr. Ahmed.
Thanks.
Now, let me start with that example that you just said. From a government perspective, you're talking about 2 aspects. It's a mixed approach. I like how you've combined these 2 topics. Okay, I'll come to that bit. Let me just get into the first slide where the top-down approach he mentioned. Now, like he rightly mentioned, the top-down approach is where the senior management is setting the overall financial target. Now, with the example that he mentioned on how a government budgeting is working, you will have the federal government setting up a budget that is passed down to the lower levels of the governments and, to each department. Now, certain other examples will be where a management of a manufacturing company is saying that they need to achieve a 10% profit margin. Now, based on that vision, it is passed down to the lower departments, and the lower departments will make sure that they're generating enough income, they're generating enough profit margin, or they're controlling their cost, and they have to take that decision for them. Another example can be where the board of a retail chain is dictating that 15% overall reduction in operating cost must be met. And that information is passed down to the lower departments, and each lower department must take the right approach to cut their cost. It doesn't flow upwards, but the management is dictating down to the lower departments. Coming back to the governmental approach here again, the federal government is giving its budget plan, its targets to the lower departments, to each emirate level departments for their input. And now the bottom-up approach, just the opposite. Rather than the management dictating down their expectation to the departments, what happens is the management will have a vision. Right. Obviously, the management will have a vision. And to achieve this vision, what will they do? They will take the inputs of the lower level departments, of the people who are executing the work. Now, for example, over here, when we're talking about, the management wants to expand into GCC market, what they're going to do is they will approach their sales team or the marketing team first, and they will ask these teams to, give us inputs on how the customers are behaving. What is the customer trend? What do you think will be the right market to tap into? Which market is doing the best? Which market is giving more profit margin? And accordingly, based on those inputs from the departments, the management will now make an approach on how to achieve the vision that it had. A very common example or a very small scale example would be if you're running a chain of restaurants or a small cafe chain. Each chain or each franchise, for example, you take KFC. Each store of KFC will have a branch manager, and the branch manager will keep submitting their monthly sales data, monthly cost data, the customer behavior details, and accordingly, based on these insights from the branch managers, the finance team or the central finance team will take a decision or will pass it on to the higher management to decide whether any promotional activities for that local area should be done, whether a resource from a lower performing branch is taken out and given to a higher performing branch, and such data or such budgeting decisions will be taken up. Coming back to the example where Ahmed really mentioned over there, in the government sector, it's not completely a top-down approach and it's not completely a bottom-up approach. Rather, it's a mix of these two approaches, where the federal department is giving their vision, it is giving their expectations to the lower departments. And now the lower departments as well do not simply follow a direction there. Instead, they use that as a vision, take their inputs, submit it back to the federal department, and the federal department will definitely use these inputs for their upcoming budgeting. So I can say it is a mix of top-down and bottom-up approach. To the third aspect that he helped us with, zero-based budgeting. Now, zero-based budgeting is starting a budget from scratch. That is, you're not looking into what you did previously. You're not going to take what your historical performance is. Rather, you're setting a budget. You're setting a target from scratch, as if you're starting new, as if you're starting a new company or a new operation. You're going to say that, this year we want to achieve so and so amount. You're not going to look at the previous year that you said you achieved only 10 million. We are expecting 5% increase. So we are going to achieve only so and so amount. That's not how a zero-based budgeting works. A zero-based budgeting is from the scratch. You're going to analyze what today's situation is. You're trying to see what your department or what your resource can give using their maximum capacity. They will justify each and every figure that they're going to give it to you. And the management is going to stitch these figures together to make a brand new budget from scratch, from zero. That is simply put what a zero-based budgeting is. A very common example, a common scenario where a zero-based budgeting is where a company moves into a restructuring setup. A company undergoing a cost restructuring may utilize a zero-based budgeting to reevaluate each and every single cost item, going through each and every item, questioning whether it is actually necessary or not, and eliminating if it is not necessary at all, and only using the necessary inputs to build your budget. It's a very common practice, and I think it stemmed from Japanese culture, kaizen costing, if most of you have heard, where small improvements are being made to improve your cost control purpose. So real life scenario is where a distribution company is trying to adopt a zero-based budgeting to overcome its issue of declining margins. It's questioning each and every expense and eliminating them and only requiring those necessary cost, necessary revenue into the budget preparation. So each department has to justify its budget from the scratch. And that is how a zero-based budgeting is different from your normal budgeting. And the last but not the least, the fourth or the most common type of budgeting. The most common type of budgeting technique, or I would happily say, one of the most laziest budgeting technique is a rolling forecast or a rolling budget. Now, a rolling budget is simply but you're taking what your previous period budget is or what your latest budget is, and you're going to just tweak it a little bit for current period expectations or current period situations to give us a future forecast or a future budget that we can use over here. So it is nothing but existing budgets that are updated on a regular basis based on the forecast or the insights from forecast that you're having as of today. An example in this case will be, say, an e-commerce, maybe like Noon. An e-commerce fulfillment company is revising its budget or revising its forecast based on the seasons. Now we have, the Black Friday, White Friday, or we have Ramadan coming in, we have Eid coming in, we have different seasons coming in. Based on the upcoming seasons, it using that insight to update what your last budget is. So if my last budget is saying, I'm selling 10 units of a monitor, but I know that in the next month, Eid is coming in and Eid festivals are coming in, I will say that not 10, but 20 monitors will go in the next month. So I'm using my previous budget, adding in the current forecast and giving me a new budget. That is nothing but rolling forecast. So just to wrap up on what are the 4 most common techniques that people usually use, we have top-down approach, we have bottom-up approach, we have zero-based costing, zero-based budgeting, and we have a rolling forecast. Okay. Now in this session, we had Mr. Ahmed give us a very insightful example over here. I want to take this opportunity, give this opportunity to anybody else or any other attendee today to give us an example of any of these items or all of these items if they wish to. Can anybody else from the attendees volunteer just to give us an example, from their real life situation that they're dealing with? I know that there are a couple of finance professionals here from finance team over here. So let us hear from them. What are situations that they face, or what are the techniques that they have come across in their daily life? Come on, anybody can, feel free to unmute and give us an example of how they're interacting with any of these approaches in their daily life. Guys, come on, let's make it interactive. Nobody out there? Nobody with an example? Should I pick randomly from the crowd? Okay, let's go random. I see that there is a Mr. Mohammed Galiani over here. Can I have you unmute yourself and just try to give us an example or your understanding of any of these approaches that you've come across? Mr. Mohammed Galiani, are you there? Okay, looks like no response from there. Is anybody else? Okay, Mr. Vishnu, I can see we have a Mr. Vishnu here. Do you want to unmute yourself and just give an example of, any of these approaches? What do you think, or what is your understanding of a top-down or a bottom-up approach? Nobody else over there? I can see Mr. Joy over here. Mr. Joy, would you like to give an insight on, what is your understanding of a top-down, bottom-up, a zero-based budgeting? Any sort of example that you've come across in your real life?
Yeah, hello, Jason. So,
Hi there.
how do you ensure your budget remains realistic and aligned with the actual performance throughout the financial year?
Okay. I got a question this way. Okay. Now to align or to ensure that your budgets are aligning with your realistic aspect over here, that is where, what do you say, a rolling forecast approach generally kicks in. It's where you're setting up a budget today, and say you set a monthly budget, and towards the end of the month, you're going to compare this with your actuals, and not just comparing with actuals. Based on today's scenario, you are trying to reassess whether, based on your forecast, what is going to happen in the next month, or what you are expecting that is going to happen in the next 2 months. You're going to take this variance analysis of budget versus actual. You're going to use the financial insight you're going to get from this forecasting technique. And based on this data, you will come back to your budget that you set initially, and you're going to revise it. You're going to tailor it so that it matches with a very realistic level, a ground level. That is one way of getting your forecast or getting your budget aligned with, a realistic expectation that you can have. Also, you can, yes, also you can integrate your bottom-up approach as well over here. Every month you can take feedback from your departments, from your functional teams. You can get their experiences, what their insights are, especially from a marketing team or sales team, from production department, what are the challenges they're facing, and accordingly decide whether you need to tweak anything in your existing budget. Maybe the manufacturing team are saying that, the quality of materials that they're getting is not good. So now the finance department must communicate with the purchase department and say, you know what, we have to get little higher quality materials, and higher quality materials will definitely be at a higher price. So accordingly, the finance team will now have to reflect this insight into their budget to make sure that it is realistic.
Yeah, right. You mean a realistic budget is not built once and just forgotten?
Definitely.
You mean it should be monitored, reviewed, and refined to stay relevant?
Correct. If you remember from one of the initial slides, one of the misconception is budgets are rigid. That is definitely not right. Budgets cannot be rigid, especially in today's dynamic world. It has to keep updated. It has to be updated on a very timely basis to reflect actual scenario and reflect realistic goals that are being set out.
Okay. So this is especially crucial in dynamic industries like retail, shipping, or construction, I believe.
True. Not just these industries as well, but it would require, it can be a very dynamic industry that, it requires maybe a weekly revision to the budget. Shipping industry is very dynamic as such. Something little more consistent will be a normal trading company where they do a monthly or a quarterly basis. When we're looking into a service sector, based on the service, we will have to see what frequency you need to reassess all your items over here. If it is a very dynamic industry, yes, you have to reassess. You have to forecast much frequently and keep revising your budget much frequently compared to less dynamic industries.
What about an accounting and audit firm? Which budget do you suggest, or which is more relevant for this?
An accounting and audit firm. Okay, that is a very, very wonderful question actually. Now, since this is a professional firm and we're looking into services side of it, generally, a very general approach that can be done over here is a top-down approach. A top-down approach is where you're setting up a target, where the management is giving a target to its sales team, saying that we need to hit so and so amount of sales. So now the sales team or your business development team is out there on the hunt trying to gather the clients. But it can never be 100% top-down approach. Over the period, you will find out you're also mixing in a bottom-up approach as well. That is, now that your sales team is in the market, you will start getting feedbacks from them. You will start getting feedbacks on what potential other markets that you can tap into. And based on that insight, you will now start updating your budget. So what may initially start with a top-down approach will also inculcate a bottom-up approach, especially in the service sector over here. And given that a service sector can go up and down, especially if you're into accounting, auditing, you're into taxation side of it, you will have regular updates into legislations or laws. So if there is a new law that is coming in, now the service sector will definitely have to use this information quickly to update it. So it might come out of a blue moon, and accordingly, it can be a rolling forecast that you're saying. You're following a certain aspect. Now there's a new aspect that is coming into your industry. Using that new aspect, you're going to update your budget. So you're mixing in a little bit of rolling forecast as well. So just to answer your approach over here, what may start as a top-down approach, you will definitely end up using a little bit of all these techniques into your budgeting. So there is no one best approach for you. Instead, the best approach is looking into all of these techniques and taking what's necessary for your industry, for your entity, to to make sure that your company runs smooth.
Thank you, Jason. One more point I would like to add is like basically budget is prepared just for control over resources to achieve the defined goal efficiently, right?
Rightly mentioned, rightly mentioned. In fact, our first slide, if you remember, we said budget equals to target. It is a plan. It is a control mechanism that we're trying to set over here. But forecast, on the other hand?
Yeah, it can be applied even for personal budget or corporate budget or government budget, or even for a small project also.
Of course, at any level that requires a planning. It can be your personal life, like you've mentioned. It can be a personal project for you. It can be a small project for your friend. It can be a company level. It can be a government level. Wherever you have such a planning come in place, you can say there is always that aspect of budgeting that is going to come in.
Yeah, basically.
Yeah. On a very personal level, it can be, on a simple scale, it can be a planning for a wedding. A wedding is not a very small thing, actually. You'll have a lot of expenses, a lot of people, a lot of logistics to manage over here. So people actually do a proper full-scale budgeting for weddings because it does involve quite a bit of funds and movement over there.
Yeah, basically, budget is a direction, or it will end up with clarity, confidence, and control, you can say.
Correct. It gives a control over there. Okay. Forecast would give you a direction of where you're going. Budgeting is that control mechanism.
So in your opinion, whether this budgeting is happening in all industries or all companies, there are around 700,000 companies in UAE. So all companies are having this budget process, in your opinion?
I believe that is exactly why we are having this session. Not all companies, especially when we're looking at the SME sector, the small and medium-sized enterprises. I'm pretty sure all the large entities have a very strict budget, have a very strict, budget approval mechanism, budget review mechanism, and a forecast exercise being taken place. But when we're looking into, the small or medium-sized enterprises in UAE, now roughly 80% of the businesses in the UAE belong to the SME sector, and they're the heart and soul of UAE. And these entities over here need to understand the importance of these budgeting and forecasting techniques and inculcate it. A lot of them do not incorporate this into their daily operations. They will have a vision in their mind, but it will most probably be unstructured. Most often, it can be family businesses, it can be other medium-sized or sole proprietorship businesses where a single owner has an idea in their mind, but it isn't efficiently put down. It isn't efficiently planned or dictated or suggested with the team. So definitely, if they have a vision, they have to put it down in writing in the form of a budget. They have to get the budget inputs, not just from a top-down approach, but an input from their teams as well to inculcate and make sure they are also given that accountability. So yes, there is a lack of understanding or lack of implementation of budgeting and forecasting, especially in the SME sector, which, as professionals or as friends or responsible finance professionals, we would definitely need to educate the others in this industry.
In your opinion, who should implement the budget? I mean, it should be implemented by the finance department or by the top management or by any other department or the project head. I mean, from where it should start?
Okay.
Based on your practical experience.
Okay. Based on practical experience, you will have the finance team over here who's going to act as a central or a key component in your budgeting function over here. Now, budgeting usually takes all the numbers, will be controlled, compiled, or processed by a finance department. But it doesn't mean your finance department is going to make the entire budget on their own. Instead, the finance department, what they do is they stitch together the inputs they're getting from each functional department. So when you're talking about, say, a manufacturing entity, you will have the top management giving their expectation of what the sales to be. You will have the sales team look into this expectation and see what is actually achievable, and the sales team will now communicate what their achievable target sounds like. Based on this target, the production department will now have to forecast and give in inputs to the finance department that so and so amount should be the production, and they will give you a production plan. Now, having sales insight from the sales team, a production insight from the production team, and similarly, in the similar fashion, from all the other departments, you're getting in their inputs. The finance team will now have to stitch them together and then make a budget or a resource allocation. So it's not just one department making up and handing over the budget to everybody. Instead, it's going to be a very practical approach where inputs from all these departments are taken and compiled centrally, mostly by the finance team itself.
See, finance team basically is aware of how the budget, what is the budget, and the importance of budget. But other departments generally, I mean, they are not into these kind of number crunching. So how we can make them motivated?
So that exactly, I mean, that's a very tricky bit of it, because it depends on how well the culture of the entity is, or how well the vision is given down to the each department level. Now, obviously, you can't expect a finance team over here to do the production planning for the manufacturing team. Instead, based on the sales target that the company is having, company will now have to get insights from the experts, which would be the production department, to analyze what their expected cost will be. They need to get input from the purchasing department. Finance team will have to see what the cost of the material is and then stitch it all together. So no matter what, even though they lack the expertise in making a budget, they would definitely be experts in sharing input from their own respective department. And it is the job of the finance team, it can be, or if there is a separate budgeting team or a financial planning or analysis team altogether for that, it is their job to ensure that they motivate their employees and get the respective input from their departments.
Okay. In my opinion,
if you like me to add a comment, I would say it's a collective effort.
Collective approach, indeed, of course.
Yeah. So mostly here, in my opinion, what should happen is the finance department should take the lead with the help of the management to stitch all departments together.
Yes, yes. And like you rightly mentioned, if they are not if the relevant department is not the expert in it, where the finance team is given the responsibility of it, they have to make sure that they educate the respective department and make sure that respective input is taken from them. And like we had one of the attendees just say right now, it's a collective approach over there. But the responsibility will be given to one set of department over there, and they will be responsible to make sure it is executed. Yeah. Thank you, Mr. Joy, for these wonderful questions. I think it gives a real life queries to what most people do have in their minds. Okay. Now let us move into certain examples of or common tools that can be used for your budgeting and forecasting. Now, there are multiple tools available out in the market, and one of the most common tools that anyone will use for their budgeting and forecasting by default will be using Microsoft Excel. I mean, that's the most favorite software that especially accountants or finance professionals, Excel runs in our blood. So Excel is the first go-to tool that we will use for forecasting or budgeting over there. But that again has its own limitations. It has its own factors that needs to be considered. Now, in this world of technology, especially with more advanced ERPs being available to us, the ERPs alone are now implementing built-in budgeting modules. So when we take into things like, when we take a certain ERPs like Tally, QuickBooks, or even Zoho, which are more web-based and user-friendly ERPs, these ERPs itself are inculcating budgeting functionalities in the ERP. Now imagine having your accounting and budgeting based on the accounting data that you're putting in a single place. Wouldn't that be very, very easy? And when we're looking for visualization tools, one of the most common tool is Power BI, a very powerful tool by Microsoft itself, where you can string in or pull in a lot of data sets, either from web application on a live feed basis or from Excel data from your local desk. You can pull in all these data, give them relationships, and make wonderful visualizations. And for much larger entities, they prefer custom tools. And some of the most common or leading tools in the custom segment is SAP, we have SAP, we have Oracle, and now we have a very much leading and a thriving one. I'm pretty sure everyone will see billboards outside for Odoo. Just a basic example of how a budget or a forecast that you're going to make on a yearly basis in an Excel template would look something as such. You're going to put in formulas, you're going to put in formulas from different sheets, pull out and try to get a data out there. Now, when we're looking into a little more stepped up version of it, where technology is involved, where you have web applications. Now, this is just a snippet from Zoho, where in Zoho accounting, they're inculcating budgeting modules, and you can use your already set accounting data, plus you can give your budgeting expectations and record actual data against your budget and take key decisions on time itself. This would be a small snippet on how a Power BI dashboard looks like. It looks complex, but it's a wonderful tool that everyone must learn, I believe. Anyone in the finance field must spend some time learn how to use Power BI, because this is a wonderful tool that will help them not just help your company, but it will actually help you scale your career growth as well over here. So yes, just running through our segment 2 that we discussed is, from beginning, if I have to run down, we spoke about what a budget is. We spoke about what a forecast is. We spoke about how these two are not same things, but they are two different things, but how they are used in connection with each other to make sure that a company sets proper budgets using financial insights. And then in segment 2, we spoke about how they have to use a company's vision and KPIs to not just set a normal budget, but to set a strategic budget. And while preparing a strategic budget, how you need to inculcate participation from different departments. And we also went through 3 common operational examples of cash flow forecast, revenue forecast, and corporate tax in this matter, of how forecasting and budgeting is used in planning, in budgeting, or in setting these 3 common operational aspects. And now, how do we execute these budgets, or how do we prepare a budget and a forecast? Well, we have 4 common techniques. We spoke about top-down, we spoke about bottom-up, we spoke about zero-based budgeting, and the most common one, the rolling forecasts. And finally, we just looked into certain tools that can be used by professionals today for budgeting and forecasting. The most common tool being Excel. I'm pretty sure everybody uses this. A more advanced bit of it being the ERP-based, a little more advanced version for visualization basis, that is Power BI, and a more customized approach for much larger entities through SAP, Oracle, or Odoo. Now, this being said, let us move into our final segment for the day, which is segment 3 and a practice session. So I think roughly for about an hour or hour and a half, all of you heard me speak. We had a couple of insights given from Mr. Ahmed, Karan, from Mr. Joy, all those real life instincts or questions being raised over here, right? Now, let us get into a very small practice session. Okay, do I have all of you over here? Everybody with me so far?
Yes.
Yeah, can I have some more answers?
Yes.
Okay, great. Okay, now let us get into a mini game. In this game, I'm going to give you a scenario, and rather than me giving you answers, I want you to take about 5 to 10 minutes of time. Read the scenario, take a break, take a washroom break if you wish like. Take 10 minutes, come back over here and give me your answers. Now, that being said, here is the scenario. Now, the scenario being, imagine you're a logistics company, and this logistic company is operating or delivery vans in the UAE. Now, the scenario over here being, over the past month, the diesel prices increased by 20%. Imagine you're a logistic company, you're operating delivery vans, and the diesel price is increasing by 20%. And not only that, one of your very important client is postponing their shipments, and because of which you are forecasting a 15% fall in revenue in the coming month. I hope the scenario is clear to everybody. You're a logistic company, you're operating delivery vans in the UAE. The diesel price in the previous months have increased by 20%. And in the coming month, one of your key client is postponing the shipment, because of which you're going to face a 15% dip in your revenue. Now, given this scenario, the instruction is pretend that you're the finance department of this logistic company. And in the next 10 minutes, I want all of you to go through these 3 questions and prepare a response for these 3 questions. The questions being, would you revise the budget or the forecast or both of it? And whenever you're revising it, are you going to revise any specific line item that you wish to revise? And the third question being, how would your response differ if this trend is continuing for the next quarter as well? I hope the scenario and the questions are clear. Any query in this mini game anybody is having? Can I get a thumbs up if it is clear? Or you can unmute and ask me if there is any question that you want to, or any query that you want to clarify. It's clear. Okay. So let's do one thing. Let's take this 5 to 10 minutes as a break. Take a walk around, drink some water, have these questions in your mind, and come back with a response for these 3 questions. Fair enough?
Fair enough.
Okay. So I'm setting a timer for 10 minutes. See you all back in 10 minutes.
Jason,
Yeah, tell me, please.
are we receiving this PPT, the one which you are explaining today?
Yes, this material will be shared with the training department, and I believe they will be sharing it across with all the attendees today.
Fine. Okay. Thank you.
Sure. Okay. See you guys in 10 minutes. Hi, everybody. Hello.
Yeah, I'm back.
All right. Okay. Good to have everybody back. Shall we continue?
Yes.
Okay. I think the slides are always on right now. Coming back to our mini game. So I hope you are able to refresh what a scenario is. The scenario being you're a logistics company who's operating delivery van. In the past months, the diesel price increased by 20%. And one of your client is postponing its shipment. So you're expecting a 15% revenue shortfall. Keeping this scenario in mind, the 3 questions that we need to answer today, or you have to give me your input, would be, would you revise the budget or forecast or both? Now, can I have any one of the attendee unmute and give me what their answer would be or what their outlook would be for the first answer alone, for the first question alone?
I think, Mr. Jason, both together, the budget and the forecast, we have to make both, يعني, has to be revised because now we have a challenge and we have a risk for the diesel price by 20%.
Right. And if I may add one more question to that, you said you need to revise both the budget and the forecast. What order would you prefer doing it? Would you update the budget first and then go ahead with a new forecast? Or would you forecast first and then come back and change your budget? How do you expect to do it?
This it's a management, you know, or the finance is to change the tools based on the decision maker, but the priority how to finance this shortfall or this cost. If we have deficit in the working capital, so we have to take decision. Who will finance this gap from the if we have liquidity or we have to take a contribution from the partners. We have to go to bank to take facilities. This is the priority. But anyway, we have to mandatory. We have to change. But from where we can finance this additional cost? If we have liquidity, it is no problem or no risk. But if we don't have, we have to ask the senior management or partners to take decision from where the deficit of this finance. Actually, I have a small example. If you
sure, please go ahead.
During the COVID, you know, the period of 2021. Some hotels, their budget based on the occupancy by 70 or 80%, and suddenly the occupancy it is zero. You know, after COVID risk, no occupancy actually. So they make major changes because no occupancy, no guest, no income, no sales, no revenue. So even the cost also, they make a rotation plan for the management, 6 months or quarter or 1 year to take vacation because no cost, you know, they cannot pay accommodation, they cannot pay salaries, they cannot pay anything. Over and above, the construction sector is the same, suffered from this. The risk number 3 came for the VAT itself. Now we make the tax return quarterly and we are liable to pay. In this case, we don't have any collection, we don't have any recovery, and we are still liable to pay the 5%. And even if we have forecast or next quarter also the same or no collection for additional 20% or something. So also we have to take decision. Who will pay the delay or you know, if we don't collect the previous quarter and we have additional quarter also, we have still deficit and we are liable to pay first quarter and the current quarter. From where That's why it is very important. يعني I mean the process for the revision budget and forecast, it is give يعني the solution how from where we can take this finance, how we can control, or how we can make balance, or as per maturity, from where we can take decision to comply with our cash flow or budget cash flow.
Indeed, yes, yes.
And all
That
this requirement.
definitely is the right approach over here. So when I like how you jumped in directly to saying that it's not just budget or forecast, but it's both. Because over
Very
here
important.
we're looking at, correct, you have your cost prices increasing in the previous months already. So now you know that, you know, you have to update your budget and include this increased costing into your budget. And not only that, right now you're expecting in the future that one of the shipment is going to be delayed and you're expecting a 15% shortfall in revenue. So there your forecast as well is going to be updated. And using that insight, you will come back and update your budget again.
I have a different answer. Not a different
Please,
answer.
please.
It's maybe a complementing answer. Like I would like to compare or connect the budgeting and forecasting with the driving a car. Like forecasting help us to see the road ahead, right? And budget help us to steer the car. So we have to see the road first, then steering.
Yes, yes.
So
That
always
is a
look
very,
ahead before
very
turning the
interesting
wheel.
one. Yeah.
So the adjustment should be on the forecast, then the budget.
Okay. That is also a very interesting key takeaway over there. Like how you're driving, first you look at the road and then you control your steering. So similarly, if you're bringing it over here, he mentioned that first you update your forecast and then come and update your budget basis the insight you're getting from your forecast, which I think is a very complementing answer to what Mr. Ahmed also mentioned over there.
Me also,
Lovely.
I'm agreed with this way. For any changes like increasing for the cost of diesels and for shortfall for revenue, immediately action it should be to review the forecast, which will affect my cash flow. I believe we start with forecast because forecast is a daily basis. We have to update it, not in long term. No, it is we have to be keep up with any new incident happen affected our cash flow and our short term decision making also. So
Wonderful.
forecast is a priority first, then forecast will help us to prepare the budget for the coming months.
Definitely. Well said. Thank you for that insight as well, Mr. Fadil. I think both
thank
of
you.
us will have to agree on that aspect itself, where the forecast over here gets assessed, the impact gets assessed first, and then we come back and see whether we have to update the budget, yes or no to that. Lovely. I think a very wonderful insight on the first question we have received from the entire audience over here. I'm looking forward to the second question now, which is what specific line item would you adjust in either of your budget or forecast? Anybody can give an answer. I think over here, since last spoke by Mr. Fadila, maybe you can give us your input on what are the specific line items that you would adjust in your budgeting or forecasting.
If we come into specific details, more details, so for increased of cost, I have to adjust the current market price. Yani, for increased cost for fuel, so I have to adjust our current market price, our prices, and also for reducing the revenue. Also, yeah, we have to adjust our consumer of our resources, like follow up how long mileage the vans consumer on the road, and we have to monitor this, and we have to consolidate our work and also we have to if there is new for stuff, for example, for stuff, if there is new hearing, I have to delay this hearing. Another example also, if there is any expenditure for capex or like something like this, I have to be accurate and be precise when make a decision for any expenditure.
Lovely. I would like to highlight
I
2
can,
points. Oh, yeah, sorry, please continue.
Yeah, that is all. Yani, that is some examples I can give it
Yes.
to.
From these examples that you've mentioned, I really like to pull out 2 examples that you mentioned. One example, one point that you mentioned was regarding managing, how long the vans are on the road, or if I have to add a point to it, managing the routes in a way that it is more efficient running, so that less fuel consumption is happening, so that you can tackle the increased costing over there. And not just that, you even touched upon increasing the pricing. Now that since there is an increase in diesel cost, increase in cost for you, you will also have to look into whether there are any gaps available for you to increase your pricing as well and recover this increased cost from your end consumer as well. So these 2 points are very, very important decisions, like you mentioned, that I would really like to stand out from here.
Thank you. Thank you.
So we can also I believe that we can introduce some fixed price contract for a long term, like 6 months. If the fuel hike prices are persist for the long, like for 2-3 months, and so I think we can consider about the fixed price contracts with the new customers, right?
Is it right for me to say that when the prices are increased, you're going to a revised pricing and you're fixing it, say, for the next 2-3 months? So if ever in the future 2-3 months, the prices actually come down, you will benefit from the decreased cost for you, and you will still maintain a fixed price over there.
Yes.
Is it right if I say it that way?
Yeah, correct. That's
lovely. Okay, more future thinking. I mean, that's a really good insight as well. Okay, and now to the final question over here. How would your response differ if this trend continues the next quarter? I think this is direct connection with, I think the last point you mentioned. You raise your prices and you fixed it, but this increase in diesel price, this trend is coming in the next quarter as well. So if that is the scenario, if your assumption is you're going to face the same situation in the coming quarter as well, will there be a difference in any of the answers that you have given?
Yeah, one suggestion is like we can explore fuel efficient vehicles upgrades.
Really good intake. Nice. So that's a little more long term you're looking into, where you expect that it is not just a short term fluctuation, but it's actually something for a long term basis. You're not going to think about your short term cost anymore, but you're looking at a little higher level, where you're going to think about electric vehicles, fuel efficient vehicles, to permanently avoid such a cost from your business itself. So that itself is a very fresh intake over here, I will say. So
And,
yes,
you can engage diversifying the client base. For example, one client is reducing 15%. I mean, it looks like you are dependent on a few clients only. So the
really
client
valid
should
input,
be,
yes.
Yeah, you should not depend on few clients. Like the client base should be increased.
Amazing, amazing. That again is a very wonderful suggestion over here. That is, everyone focused only on the fuel price, but where you're seeing one customer is leading to 15% shortfall in revenue means you are very focused on less number of clients. So looking into a wider client base itself gives us a safety or diversification over there. So yes, before you guys answered, I just noted down some certain sample answers that would be, and I think most of you have touched upon all these points. So in the first point, would we revise the budget or forecast or both? I think everybody answered it right. We will have to revise both of it itself. Any specific line items? Wonderful answers were given in over here, where you might look into updating your pricing with the clients, or a fuel efficient routes you're trying to find to reduce the cost over there. And on the third bit of it, where you're expecting this to continue for the next quarter or long-term perspective, you're looking at higher levels itself, where you're saying about
channel channel. She has to video from that. Ashita.
sorry, were you talking this way? I didn't get you.
The video.
I think someone is, unmuted by mistake.
Embarrassing pictures of me.
Oh, I think we have a slight disturbance over there.
So now
can-
I screen record the video and I was waiting for that.
Can,
You can mute.
Security, okay?
requesting admin to mute one person, I believe.
But she doesn't know.
Okay. So yeah, the last bit of it, going into a next level where you're seeing for a higher level over there. So yeah, and before we conclude, I just want to do a small debrief also. Now, if y'all analyze the responses that was provided to me, let us look at the first question. What did you prioritize? Given this scenario, were you prioritizing cost control or were you prioritizing revenue recovery? Now, most of the answers I received was, controlling the fuel cost. But we did have a couple of answers as well that talked about increasing your pricing over here and recovering that cost from your customers. So when you're doing a budgeting, when you're getting a forecast insight, you will have to look into not just a cost control or a revenue recovery. Basis the situation, you will have to keep an open mind for both of these aspects. Second debrief point is, how did the assumptions affect your decision? Now, when it was a very short-term issue, we talked about, making fuel efficient routes or making fixed contracts with your clients to increase your pricing, etc. But when I said that, what if it is coming ahead in the same situation is coming ahead in the next quarter, or if it's coming for more periods ahead, I got a very good answer that said, if it is a long-term issue, then forget about your fuel cost. Think about getting an electric vehicle at this point. So you see, from that short-term or long-term assumption basis, the whole decision is changing over here. Your insight based on the forecast over there plays a very vital role on how your budget is going to be affected. And then last but not the least, we will definitely have to look into what are the tools or data that will be needed to make this decision in real life. Now, we will be taking historical fuel cost. We might look into client shipment patterns. A very creative way could be visualizing the routes, the delivery routes, and optimizing the delivery routes in a way that you want to optimize your fuel cost. Or if you're moving into an electric vehicle, definitely it will help you save the electricity cost at this point by conserving battery. So all these tools or data on situational basis is we have to look wide and we have to see what is best suited and apply it to our business or to the situation that we are going to face. So reaching towards the end of this mini game, I hope you were able to think or apply what we discussed in today's session and try to see, how each of those thought matters when we're talking about a forecast or budget over here. And moving to the conclusion over here, if I have to conclude the entire thing in 3 bits, first we spoke about budget equals to control, forecast equals to adaptability, where we are taking future insight. And the third aspect is intersecting these two, that is using these two together for an optimal planning. And I would like to end with 2 quotes that you can see on the screen over here. Budgeting is telling your money where to go instead of wondering where it went. But when you're looking into forecasting is not about predicting the future, but it's about reducing the uncertainty by getting a future foresight. And that being said, thank you all for being a very wonderful crowd. Before I end the session, I would accept any sort of Q&A or any queries, any insights that you would wish to share with the crowd over here before we move to the end of the session.
I'm not sure if you cover the the budgetary slack.
Can you say that again? Sorry.
Budgetary slack.
Budgetary slack. Okay. Thank you for bringing up that point. Actually, yes, you were right. It is not there in this presentation over here. We were just checking on budget and focus. But now that you've brought up, I would really love to highlight this point as well. Budgetary slack is a concept that typically comes along with a bottom-up approach. A bottom-up approach is where we're getting inputs from the lower level departments, which is being used by the higher management to prepare its budget. Now, definitely a question, or in practical scenarios, there will be an issue there because the lower level departments might be slightly lazy. They would want life to be easy for them. So they would prefer setting a lower budget in a way that it's favorable or easy for them to achieve. In a way that maybe if the management had given a direction from the top, it would have been more beneficial by way of maximum utilization. So in a bottom-up approach, generally, people might face a practical issue of budgetary slack, where they might set lower budget, lower than what they can actually achieve or lower than what they can actually contribute to the company, which will give rise to this budgetary slack option. Ashley, now that you've brought it, do you want to share any insight or any, situation or experience that you've had with a budgetary slack?
Actually, not really. But I heard about this one. I thought to ask you. That's why.
Okay. Not
Thank
an
you.
issue.
It was
I
very
hope
nice
I
and
was able
short,
to. Yes.
brief about it you have done. Thank you very much.
Thank you so much.
So
I would
in many
appreciate.
companies, what is happening is like in order to save their face, they are compromising on a lower figure and getting their bonus based on the higher performance.
Correct. Yeah. It would seem as if they're having higher performance over here, but it might be a case of budgetary slack over there. They might be able to achieve, say, 100 units of sales in actual, but if it is a bottom-up approach, they might get a little comfortable or lazy. They might say that, only 80 is what they can do, but actually they will end up achieving 90 or 95 in a way that it turns out to be that as if they have overdone themselves, but in actual, there is a slack from there. And while they were supposed to achieve 100, they only achieved 90 or 95 by keeping 80 as a target for themselves. So that can be a very alarming issue if not clearly looked into. So even in a bottom-up approach, each input given by the lower level departments must be scrutinized, must be justified before accepting or being stitched into the financial budget. Yes. If any other questions are there, feel free to ask. If not, we can proceed towards the finalization. Okay. I guess there are no more queries left. If that's the case, thank you all for being a very wonderful crowd. Myself, CA Jason Mandavathil. I'm a fellow member of AAA, as well an auditor, along with Hussain Al Shamsi Chartered Accountants Ajman, as well an FT approved tax agent with Binjoy Auditors LLC, Dubai. Feel free to reach out to me in case of any sort of queries or further references, further connections that you wish to have. Thank you all for being a wonderful crowd and amazing participation from your end.
Thank you very much.
Thank you, Jason, for your wonderful efforts.
Thank you very much.
Thank you.
Thank you. It was a favorable session. Thank you.
Thank you very much. Thank you. Thank
Okay,
you.
that's it. Handing it over back to the training department. If that's it, I think we can all drop from the call.
I hope you will be sharing the slides.
Yes. It will be shared with, I think, Mr. Mohanad from the training department, and I believe he should be sharing it with all the attendees who have registered.
And also, it will be better if you could share your LinkedIn profile ID or some contact details.
Sure. I'll actually add it to the last slide of the presentation itself. So you will get the presentation and my contact as well.
Perfect.
Okay, lovely. Thank you so much for being a wonderful crowd. Take care. Good evening.